And welcome back to Making Sense. Hope you're all having a fantastic Friday. So for all of you who are joining us for the first time, welcome to Making Sense. Making Sense is a platform that is about having conversations that encourage and build financial empowerment in people. We believe in going to those places that people are afraid of so that it is thought-provoking and gives you a reason to change something. So if you're joining us for the first time, Making Sense was started as a result of the book I wrote called Making Sense. So a lot of what we discuss is drawn from principles around that book. And Making Sense is a book that has told the story of money through conversations such as this and through actual stories of people. And we'll be telling you how to get the book as we go along. But from that book, we have just taken the book and started expanding and, gone into so many areas about money, about life, about business, because we think we're living in a time when nobody can afford to be ignorant, and we all are asking ourselves, what do we need to do and what do we need to change? So please let us know where you're tuning in from. Welcome back to those who've been following us along, and those who are starting today, welcome. We do this every Friday at 2 p.m. with intermittent breaks. So please join this community. So I hope you're having a great Friday. Let me know where you're tuning in from. And remember, as we always do, please ask questions, post your questions on the chat, and we'll be able to actually look at them. Now, if you've been following us for the last couple of weeks, we've really started looking at what are the opportunities, what do people need to do, how do we need to change our mindsets? And the last couple of weeks, we've tackled things like identity, who are you without the money? We've tackled the language of the new economy. Last week, we started looking at digital. Now, there's an area, and whenever we're talking about money, investments, yay, savings, yay, how to create wealth, yay, where to invest, yay, how to get out of debt, yay. But there is an area that most of us don't quite want to go, yeah? And, I'm not having this conversation because I'm perfect in this area. In fact, I'm sitting here as a result of very hard lessons learned in the area of tax. Yes, guys, today we are talking about tax. And I know once I said that word, please, if you're with me, please admit if you felt, if you're tempted to imagine, I'm not going to stream anymore. If you're tempted to tell yourself, I'll log on to the YouTube video later, because it's an area we don't want to go. But the truth is we cannot create wealth without understanding tax, without paying tax. And today we have a guest expert, a friend of mine, Paul Mutegi, who, God put him on earth, I think, to break this area of tax down to our level and make us understand it so that we're not so scared of it. So even as we go along, please start sharing your experience about tax. And tax is not just for the people who are in business. Everybody needs to understand tax. The Bible says, give unto Caesar what is Caesar's. Even Jesus said it when people were trying to ask him, should we pay tax? He was very clear, give unto Caesar what is Caesar's, yeah? So this is an area we struggle with. And I know even when I started working, when I started business, you make money and that money, you want it to be yours. Let's just start that. Let me admit for myself, you want it to be yours. And it's always one of those things that you get right along the way. And let me tell you, I paid very hard lessons along the way because of not understanding tax. So I'll just allow Paul to first introduce himself. First of all, welcome, Paul, and thank you so much for joining us today for this topic. Yeah.
Thanks, Waceke.
And maybe just introduce yourself to our audience today.
Thanks, Waceke, for the opportunity. I think that's a very good introduction. So my name is Paul Mutegi. I'm a tax expert. I'm a lawyer and an accountant practicing in Nairobi. And the purpose of the call or the live today is essentially to break down the mindset around taxation, what KRA knows about you, the myths that exist with the Revenue Authority and with taxation, and how you can make your taxes more efficient or work for you. All this is in line with the theme of creating wealth and protecting your wealth. Because how you should understand it is that KRA is a shareholder in your business and in your employment income every month, right? So that's the general way to understand it, and to make peace with the fact that you should give unto Caesar what belongs to Caesar.
What is Caesar's, So Paul, when I started business, you've said how we are going to go through myths. So I'm now trying to understand what are the myths I had, and all those who are out there, you can relate to this. So when I started business, I think my first myth, Paul, was I'm small, so I don't need to bother about tax. When I'm 3 years, 5 years, and I'm making money, when I'm making real money, I can bother about tax. But for now, I'm small. Nobody will look at me. Audits, I heard that audits are only done after the first 3 years. So I don't need to bother with this tax thing. So that was my myth, Is that something a lot of people believe? And are we wrong in saying because I'm small, or even just because I'm employed, I don't need to bother with tax?
Yeah, that's a big one. That's a big one because most people think that if they're running a business, for instance, as a side hustle, that the Revenue Authority is not aware about what they're doing. Or, if they start a small business, including selling mandazis, that, nobody is aware and nobody cares, right? Or that, you will only be audited after 5 years. That's one of the big myths. KRA does audits at any time. In fact, I'm aware that in the recent past, they've been doing audits even for companies that are 1 year old, right?
Wow. Yeah.
That's because of the kind of information that the Revenue Authority has. So then if that's at their disposal, then what they do is they look at you on a risk basis. So even if you think you're small, if the Revenue Authority doesn't think you're small, then that could be a problem for you. Now, some of the other myths that I've seen, in the industry include a myth that, for instance, if that you're a consultant, the only tax that is due from your income is the 5% withholding tax. So that's not correct. Because for consultancy fees, if you're a resident taxpayer, then the 5% is an advance tax on your pay as you earn. So if you're an employee, pay as you earn is deducted by your employer. But if you're a consultant, then it is your own responsibility to deduct pay as you earn from your pay and settle it with the KRA. So that's a big myth.
That's a big myth. Paul, let me break this down. So I do a job as a consultant for you. I get paid 100,000 shillings. What I thought, or a lot of people think, is I pay my 5%. And this is, we're talking about the Kenyan context. So whatever country you're tuning in from, I guess it's about the principle. Go and put the context in whatever environment you're from.
The principle is the same, yes.
5%. That is what we've been told withholding tax, And I think a lot of people, Paul, feel, let me package myself as a consultant because then we only pay 5%, not 30% like everybody else.
That's very common. So very common.
Very common, So I pay my 5%. So to me, I've finished tax. Then my 95,000 shillings, I can go and spend it. That's what a lot of people think. So what you're now saying is actually you still have to pay an additional tax on the remainder.
So actually, you see, the thing is, and how to understand it is that from the beginning, your income was subject to pay as you earn, right?
Okay.
And that the withholding tax of 5% is only a way in which the Revenue Authority is able to collect your tax in advance, right?
So it's like an advance, it's like a deposit,
like an advance tax, right? So I'll give you an example. Let's say you earn 100,000 shillings from a job.
Yes.
What you'll take home is 95,000 shillings after the 5% is deducted.
Yes.
But at the end of the year, what you're required to do is look at what your business expenses were on that job. Deduct your business expenses from the 100K. So let's say your business expenses were 40,000.
Yes.
You would then say that your taxable income is 60,000, having deducted your expenses.
Yes.
You would then tax the 60,000 at 25%. and that's the new rate from April 2020. Then after you get your tax, you would deduct the 5% that was deducted earlier by your client. So it's not as easy as 100 minus 5 equals 95. You need to look at what your business expenses are, and then the balance is what is your taxable income, and then you multiply that by 25%.
Which brings another point. Then a lot of us are not keeping records about what our business expenses are. I can't actually say from the 95,000, I used this for fuel, I used this for my phone, I used this for photocopying and all that, because I'm not keeping the records.
That's a very big problem, actually. And particularly for people who are trying to file their returns at the end of the year. You see, if you're a business person, like let's say you're a consultant, your tax return will ask you to fill in your business expenses for the year. Now, it's a whole 12 months. It could be expenses like internet, rent, salaries, licenses, advertising, that kind of thing. Now, if you don't have a record, then there is no way of telling other than an estimate, and you could get it wrong, exactly what your expenses were. So in essence, what happens is that many of these expenses fall through the cracks. You're not able to deduct them from your salary, from your income, and therefore you end up paying more tax, right? So not having a record of your expenses is detrimental to you, because you actually pay more tax than you're supposed to.
Oh, wow. We have some comments coming in. Mohammed, please ask your questions. Please post your questions. You're saying this is eye-opening, lots of questions on company tax. While Paul is here, please ask your questions. But I want to point out to what Abdi is saying. The tax man is not my best friend. And even Paul, even as people listen to you, as we are hearing all these tax, whatever, for us, Paul, our instinct will then be, I'm not paying tax. I'm going to find a way of not to pay tax. But somehow, Paul, we keep thinking that we are going to be able to grow, because this platform, as you said, these are wealth creation conversations. And guys, we're talking about tax because you have to pay tax to create wealth. And Paul, what I believe is that if we are hiding from tax, we are constantly going to be trying to grow, but we are shrinking. And someone once told me, you can't shrink your way into growth. You can't shrink your way into growth. You can't be here, let me hide my 100K, yet I expect my mind to figure out how to make 100 million. So why are we, because even I think what Abdi said, the tax man is not my friend. People want to run away from tax. Please bust for us the myth of you will grow. And I know you have some stories about that. You will grow without paying tax. You can see the comments still coming in. We are screwed. Tax cap is 30%. You see, we have that mentality. And I think what we're here to do is to change our mindset around, first even leave the percentages, the mindset around paying tax. Because I think some of us, it's our belief systems, what we saw our parents do, what the conversations we had, everybody was like, how do we run away from paying tax? That is what we are thinking about most of the time, as opposed to thinking about how to grow. Even
in terms of media stories, you've seen very many media stories about people being locked up for tax crimes and things like that. So of course that is not helpful, because even around the world, it is noted that countries where the taxman is actually a friend, then they are able to collect more tax, because the citizens then understand exactly, what they're supposed to pay and when they're supposed to pay it. Now, I know in Kenya, there's an issue about how taxes are used. I know that's a political and it's also a moral question that it's quite a difficult one. But I think in terms of you as an individual and your own peace of mind, and your route to creating wealth for you and your family, then it is important for you to remember that if you don't pay tax, then you always have a cap about how far you can grow, right? You're always capped, because you're always afraid that if I then grow above my under the radar amount,
I want to no longer be under the radar.
Yes, then I will no longer be under the radar, and I will have to pay tax for the current year and for the years in the past. Now that's problematic. Now, if you're able to get past that fear and understand tax better, then for you, you're able to grow, right? So I can give you a few examples that I've seen in the market regarding people who wanted to remain under the radar. The first one is, you remember during the Mishuki era, some gentleman was importing speed governors and seatbelts.
Yes.
You know, he was all over the media saying how much money he's making, which was his first mistake, because the Revenue Authority then has teams that are aware of what happens, you know, in the newspapers, in the news all the time.
Yes.
They caught up with him, and while he had imported about 5 containers of his merchandise, there were still some containers that were still being imported that were in the high seas. And what KRA told him is, because you have not paid tax on the 5 that you have already sold, then we will seize the 3 that are coming in, and we will use that, we will sell them and use that money for tax, right?
Wow.
So you can see that that's a very tragic position.
Yes.
What I'm also aware of is that, you know, and this is a very common one, many farmers are interviewed by media on what is called Seeds of Gold and other such forums in the newspapers. Now, what happens is that the Revenue Authority actually looks through, you know, that kind of information, because they have authority to get information from any third party. They can then catch up with you. And, you know, one of the things that the media always asks you when you're being featured is, how much money do you make per month or per week?
Yes, per week. Because there are those stories of how my hustle gives me 300,000 shillings per week.
Yes. And because you are now making some money and you want the world to know that you actually
want
wealthy,
to floss. You want to floss. Yeah.
Which is your first mistake. You then tell them, I make, in a bad month, I make between 700K and 1 million, right?
Yeah.
So that's your first mistake, because the Kenya Revenue Authority then looks at your returns. They see whether you are declaring agricultural income as taxable. They find out you're actually declaring nil returns. And that's how they get you, right?
Yeah.
The same thing happens on Instagram and on Facebook.
Yeah.
You know, you're always posting, you know, your new
Mercedes
new
car,
your new house,
the holiday,
you traveled to Hawaii, that kind of thing. So that's very problematic, particularly if you have not paid tax, right? Because then you need to be in a position where you can explain the source of your wealth, and also show that that wealth has been declared in your tax returns, right? So any windfall payment that you receive that is from business, that needs to be declared. In fact, I'll tell you now, with the fight against corruption in this country, what has happened is that there's a multi-agency task force that is then used, you know, it comprises of the Anti-Corruption Commission, the KRA, quite a number of bodies. So even anybody who's caught for, you know, suspected corruption, the Kenya Revenue Authority wants its share, right? Because essentially what you're saying is that you earn business income, and if you earn business income, then that income is taxable by the KRA.
Wow. So in a nutshell, guys, what Paul is saying, if you want to create wealth and enjoy your wealth, because all these things you're creating, you're working, you're saving, you're investing, you have your businesses, you have your hustles, you want to make money so that you live, you enjoy a kind of life. You want to travel, you want to take your kids to certain schools, you want to have a nice car. And we are saying there's nothing wrong with that, but pay the tax so that you can enjoy. Otherwise, you'll be in the trap of, even though you do make the money, you'll be trying to figure out how to hide it, and hence you cannot enjoy it, which is, I think, a lot of people who have gotten money illegally and don't pay tax are forced to do, to keep hiding it, so you, at the end of your life, you'll be like, I made money so that I could hide it, so that I could, from the taxman. So Paul, let's take a couple of questions. I know Catherine Modoni is really, really asking, at what point should she start paying tax? And she's linking it to what you ask what is the radar amount? Yeah. But our point has been, Catherine, don't operate under the radar. But Paul, maybe you can answer Catherine's question.
So Catherine, actually there's a radar amount.
Yeah.
Anything below 24,000 shillings per month is not subject to tax in Kenya for an employee, right? Or for an individual. So whether it's consultancy income, whether it's employment income, rental income, if it's below 24,000 in a month, then it's not subject to tax in Kenya. That's effective 1st of April 2020.
Yes.
And before that, the under the radar amount was about 12,298. So you can see, while an under the radar amount exists, that amount is very low, right?
Yes.
24,000, while it is good money, it's not exactly, generational wealth. Yes. So it's not something that's not what you're working towards, right?
Yeah. So maybe your starting point, but it's not what you're working towards. Yeah.
Correct. So then what that means is that if you earn anything more than 24,000 as an employee, that should be on payroll. If you earn anything more than 24,000 as a consultant, you should be able to pay tax on that. And the same thing with rental income.
Okay. Adonga is asking, when you start a business, how do you remit tax? Water selling, charcoal business, how do you remit tax? And I think this is where I think a lot of people do want to pay tax, but Paul, they just don't have the knowledge. Even we have a comment saying we need comprehensive education around tax. And this is why we are doing what we are doing today.
Yeah. That's exactly right. So I admit that it's quite difficult to understand Kenyan tax law, which is sometimes the reason why it's important to get a consultant to assist you. Now, the simple answer to the question is that what you're supposed to do as a business person is keep a record of all your income, whether that's through cash or M-Pesa, and keep a record of all your expenses. Right? So, and that applies to all businesses, including, as you have said, a charcoal selling business, right?
Yeah. So now, including those who are employed and have a side hustle, that side hustle should be treated exactly the same way.
Yeah, so the side hustle is treated as business income, which is separate from your employment income, which has already been taxed, right?
Yeah.
Now, I'll give it to the government that actually in the recent past, they have been trying to make payment of taxes easier, right? In 2015, they introduced a new rate of tax on rental income. The rate is 10% on your gross income. So it's very easy to understand. You don't even need to have your expenses. Now, in 2018 and 19, and even in 2020, they introduced two other simplified methods of paying tax. They are presumptive tax and turnover tax, right?
Okay, yeah.
So you may have seen in the media what they're calling the Mamamboga tax, which is the presumptive tax.
Yeah.
It's about 15% of the license you pay to your city council. So you can see that it's not too much. It's paid once a year.
Okay.
And it's a final tax for small business persons. So that's something that is encouraged for you to do.
Okay.
Or what is called turnover tax, which is about 3% of your turnover in a year. Now, you see those two methods are quite easy for you to understand and to compute as a business person. Now, it could be that you may need some advice on whether those two methods are preferable to corporation tax or corporate tax income for a company at 30% or 25%, and also for pay as you earn at 25%. So you see, sometimes it is that complexity that makes it difficult for people to then pay tax. But particularly with presumptive tax and turnover tax, those are very simple methods in which a small business person can simply can comply with the law and not have to look over their shoulder on whether KRA is coming for them.
Okay. All right. Okay. So in a nutshell, Paul, the starting point for people is, first of all, keep all your records. First of all, just start that. Even if today you don't know exactly what tax you're after, start keeping record of your business income and your business expenses.
Exactly.
Once you're doing that, you can now start looking at what are the various options. Which is what you're calling presumptive tax based on a license, or turnover tax, or go into corporate tax. But I think what you're also telling people is you don't have to know everything. Yeah.
Yes.
As you start keeping your records, you'll be able to start figuring out who can you work with. And take it from me, guys. I'm here. I've run Centonomy. I'm a finance person, but I really messed up when it came to tax, and I had a huge penalty to pay because of that. Please do not try to become a tax expert yourself. So if you're starting out, you can do the simple things, but as your business is growing or your side hustle is growing, please reach out. While we think the authority can do better in giving people information, please do reach out to someone who knows. And after that, we'll give you our Centonomy email address after this conversation, where you can reach out to us. And if you have any extra questions or areas that you want help with tax, we'll be able to forward them to our partners, the partners we work with, to be able to help you with that. So even as the questions keep coming in, Paul, maybe it will help us to understand what information does the tax authority have on me? What do they know about me? Yeah. What do they know about Waceke? What do they know about Sharon? What do they know about Catherine? Yeah.
The best starting point and the most prudent starting point for you as a taxpayer is to assume that the Kenya Revenue Authority knows everything about your income, right? That's the best starting point, because then what that means is that there is no income that you earn that they're not aware about. So I'll give you a few examples.
Okay.
You know, if, for instance, you win a tender with the government of Kenya or a county or a county government, that tender will need to be processed through the government system called IFMIS. Now, anybody whose details are on IFMIS is probably going to be audited by the Kenya Revenue Authority, because the Revenue Authority has access to IFMIS, right? In fact, in some counties, they want to integrate IFMIS with iTax. So now, with that kind of integration, then there's no information that KRA does not know about your tender, right?
Yes.
Now, what would happen is that if you don't have records about your expenses, but KRA can see from IFMIS that you earned 10 million shillings, KRA will ask you to pay 2.5 million shillings, which is a 25% of the 10. Because if you don't have expenses, then the gross income is all taxable, right?
Okay, yeah.
That's a big one. The second one is the NTSA system called TIMS, where you can buy and sell cars.
Yes.
Now, you'll notice that for that, your PIN number is required.
Yes.
Right?
Yes.
So if you buy a car, if you sell a car, KRA is aware that you're getting income, or that you have income for you to buy a car, right? So then it could be the case that you are buying and selling cars in your own name. You think the KRA is not aware, but with your PIN number, they can tell you exactly which cars you bought when, right? So you see, the problem there is that you would then need to explain the source of your wealth, because it is likely that you're doing that on one side, and on the other side, on iTax, you're filing a nil return. Now, if you file a nil return, it means you don't have any income taxable in Kenya, which is unlikely.
You could not have bought that car.
Yeah, which is unlikely, because you have been buying and selling cars, which is business income, right? Now, the other system that the Revenue Authority is aware about and they use quite often is the Lands Registry and the Companies Registry. If you buy and sell land in Kenya, you require a PIN number. KRA is the one that is in charge of collecting capital gains tax and stamp duty on the sale of land and shares. So they are aware about that, those transactions. If you register companies, including business names, then KRA is aware that you have actually registered 7 companies in the last 2 years, right? So it is unlikely that you've been registering companies, been buying and selling land and cars, right? And yet you don't have any taxable income in Kenya. The same thing with registering water meters and electricity meters with KPLC or Nairobi Water, or and for that usually the KRA assumes that you are a landlord. Or if you then go and you buy insurance from an insurance company, then you have to use your PIN number, and in that way the Revenue Authority can then get access to your details. So you see, for instance, it's unlikely that you're registering 10 electricity meters and buying insurance policies, and yet your income tax return shows nil. Right? So that's
or 24,000 or under the radar 24,000.
Yeah, you can't be at 24,000 and yet you're buying land for 3 million every 2 months.
Yes. So, I mean, it's back to the point. If you want to enjoy the money that you're making, just pay the tax. Yeah. If you want to keep reinvesting, because you've mentioned two areas that a lot of people, when they have money, they think of buying property and they think of buying cars. I think human nature, people are like that. That's one of the big ticket items that people spend cash on. Yeah. Cars and property. And what you're saying KRA has done is a car. Even though I make my 5 million under the radar, and I go and buy my Mercedes, it will ping KRA, for lack of a better word, on the logbook, the car purchase, and land absolutely the same thing. Yeah.
Yeah. And in other countries, it's even worse than in Kenya. So Kenya is not that bad, because in other countries like in India, Ghana, South Africa, what happens is that the revenue authority has access to your bank account, right?
Yes, yeah.
So unless you're being paid entirely in cash, then there's no way that the revenue authority will not know exactly how much you're earning. So even if you're being paid in cash, in one time or the other, that money will have to come into the system using your name. So then that's where they get you.
Okay. What about my bank account and my M-Pesa? Because I think a lot of people also think, because I'm transacting M-Pesa, I'm again under the radar, or I'm out of the tax. How much access does KRA have? We've heard of people's bank accounts being frozen. How much access does KRA have to that?
Yeah. So the freezing of bank accounts is as a result of you not having paid your tax. Yeah. So then KRA has authority to freeze your bank account. And anything in that account can then be transferred to KRA directly, right?
Yeah.
Now, according to the law right now, your bank account and your M-Pesa statement are not accessible to the revenue authority unless you're being audited, right? Mm-hmm. So if you're being audited, then you have a responsibility to send that information to the KRA. So, for instance, if you sell cakes or shoes or books, and you receive the money on your own personal M-Pesa or through a pay bill or buy goods till, then that can be subject to an audit, and you would have to explain which of the income in those pockets is personal income and what is taxable income, right? Okay. So because somebody could be paying you, paying you back a loan, etc., but there could also be proceeds from the sale of your items. So then you would have to explain what exactly is what. Now you see, if for instance you prepare your books of accounts on an annual basis, and you have already shown these records of what your income is, what your expenses are, then because those have already been audited, then you're never in a problem, because should you be audited, you simply provide your finances, or what you have used to file your tax. You provide your accounts, and the KRA can see exactly what your income is and what your expenses are.
Yeah.
Right. Okay. So continuously filing a nil return is a red flag.
Okay.
Of an extended period. Filing a loss return, let's say for a number of years, is also a red flag.
It's a red flag,
because then the revenue authority will think, how come you're in business for so many years and yet you've never made a profit? Right?
Okay, all right.
So it could be the beginning of an audit for you.
Okay. And I guess also bloating our expenses is a red flag in businesses. Let's say I earn 100,000 per month, but I'm saying my entertainment expenses are 80,000 shillings. So that is that, because sometimes we're like, let's pad, people use that word, let's pad their accounts. So that
will not work. The revenue authority has seen all these tricks in the many years it has existed. So showing personal expenses as being business expenses simply will not work, right?
Okay.
Because while you could say you earn 100,000 and that's easy to determine because we can look at your M-Pesa.
Yes.
If you say that, you have entertained clients for 500,000 during the same year, you'll be asked for your receipts. And if you're not able to bring any receipts, then that will be turned to zero, meaning you'll have to pay tax on the full income that you've earned. So padding of your business expenses is not recommended. As you've mentioned, it's another red flag.
Okay, all right. And of course, unexplained wealth, as you talked about before, where my return is showing the 24,000, but I have 10 properties. Yeah.
Yes.
Yes.
So actually, now with the systems that I mentioned, KRA has access to. What the Revenue Authority now is doing is that audits are risk-based, meaning and they're data-driven. So they'll not just audit anybody, but they will audit those people who have been flagged by the system, right?
Okay. Yes.
So it's not somebody sitting at KRA who is looking at your data. The data has been fed into computers that then do data analysis.
Okay.
And basically they're using artificial intelligence.
All right.
To then come up with who to audit. Now you see, with that kind of a system, and they've been doing that for I think the last 2 or 3 years. Then you really can't get away, right? Because it's not subjective, it's an objective way in which taxpayers or tax cheats are caught, right? So then you see, essentially, long and short is that we are saying you'd rather simply comply, be tax compliant.
Yeah.
That opens the world for you, right? In terms of you continuing to build your wealth and to protect it. Otherwise, you'll spend a lot of time and money worrying about how to deal with your non-compliance.
Okay. All right. Wow. Well, let's take a couple of questions. Abdi is asking, can you claim dependence on your tax return? Now that we know about the information KRA has, can you claim dependence? Yeah.
No, you can't. The only way you can claim on a dependent is if you are paying an insurance policy for them.
Okay.
Either an education policy that is in excess of 10 years or a life policy, right?
Okay.
Otherwise, in Kenya, for instance, there is no tax benefit for being married as opposed to being single, which is available in other countries.
Okay. All right. Sharon is asking, is presumptive and turnover tax only limited to rent? No.
No, so actually presumptive and turnover tax do not apply to rent. They apply to business income. And there's a carve out that
Sorry, Paul, I think we have lost you. Okay, as we're waiting for Paul to come. Okay.
Income that is subject to, can you hear me?
Yeah, we can hear you. We lost you for a bit, so you may have to repeat it. Okay, guys, as Paul is coming back, let me just answer Marilyn's question.
Yeah.
If you're, Marilyn, what we're talking about, yes, we did mention the 24,000 shillings. Yeah, that is that would be the minimum. Yeah, but what we're actually saying and what Paul has actually been talking about here, I know you're asking, Marilyn, if we are at 24K always, what would be the problem? Yeah, but I think the mindset shift that we are turning around here is, if you can start out at 24, and yes, let's face it, a lot of people right now are not earning the 24. So you've started at 24, and right now in Kenya, I know people are watching from all over the world, but there's a minimum threshold. If you start out from the 24,000 shillings, you're not paying tax on it. So there's no problem there, yeah? So if you're always earning 24,000 shillings, you don't have to pay tax, yeah? So 24,000 shillings, you could be earning from a salary, or 24,000 shillings, you could also be earning because of that's what you pay yourself from your business. But I think what we're talking about here is a complete shift in mindset that cannot be what you want 2 years from now, 5 years from now, 10 years from now. So the fact is, we're talking about wealth creation. So even though you earn 24 today, yeah, we are saying your goals and your aspirations you'll want to earn more. Now, if you start earning more with the mindset of, let me avoid paying tax, you will remain small, because you'll always be thinking, as opposed to thinking about how to grow, you're thinking about, yes, how can I grow, but in a way that I avoid tax? That will limit your growth. So what Paul is actually saying is pay the tax and grow. Yeah. So stop trying to focus so much and spending so much time of your mind in how do I avoid paying tax. Learn how to be compliant, comply, and then enjoy the fruits of your labor. So Marilyn, as much as, yes, there are many people who don't currently make the 20, the aim of this conversation is so that we stop thinking about tax as something to avoid. So we are changing our mindsets around tax, and we start thinking of tax as something that is there. Give unto Caesar what is Caesar's. Yeah. So that we stop trying to create wealth, but with a small mindset. So what Paul was actually emphasizing is, as long as your aim is to avoid paying tax, you will remain small, because it will always be, how do I go under the radar and how do I actually hide it? Paul, welcome back. I was just responding to Marilyn's question, which was going back to what we actually talked about before. Yeah. Yeah.
So as I was saying, there's a carve out in the law for presumptive tax and for turnover tax. They don't apply to rental income or consultancy income.
Okay. All right. Okay. Capital gains on stocks and real estate. Capital gains tax. That's a good question.
Yeah, that's a good question. Capital gains tax applies at a rate of 5%. It applies to shares that are not listed on the Nairobi Securities Exchange.
Yes.
And also to the sale of land, and it's paid by the seller, while stamp duty is paid by the buyer.
Okay. KRA. So you can see Kevin's question, Paul. Yeah. Does KRA pay people when they owe them tax, reliefs and submitting, or they just deduct from the tax you owe? How do the returns work?
Well, unfortunately, if you have a tax refund in Kenya, you would have to apply for it to be paid back to you. Yeah. It's not automatic that if you have a tax refund, the same will be paid to your bank account, like it happens in the US.
Yes.
So there's a whole process, meaning if you owe money in 1 year, then you'd have to pay it regardless of whether in the previous year KRA owed you money.
Okay. All right. Gains from SACCO and dividends on shares, is that taxable?
Yeah, that's taxable. The rate is 5% withholding tax.
That's a withholding tax, yeah?
Yes, but that's a final tax, meaning you don't need to pay any further tax, right? The same thing applies on interest you earn from a fixed deposit account or from a treasury bill or a bond. Once you are taxed at 15%, then it is not subject to further tax.
So it's not like the consultancy tax we talked about, where you have to go and claim it and pay AYE is taken from it. And that's the same with even the interest we get on our savings accounts and bank accounts, and they pay us the interest. So by the time we receive it, they have already withheld the tax, correct?
Yeah, and then you don't need to declare the balance in your tax return.
Okay, all right. So that is a final tax that will not bring you problems, yeah?
Yes.
Virginia's question about how you pay tax in business is a good intro into how can, now that we know all this and we've been through the busting the myths of tax, we've been through understanding that KRA basically knows, or whatever tax authority in your country, the systems that are being built all over basically mean that the taxman knows everything about you. So let's live like when you sneeze, the taxman knows you have sneezed. Yeah. I think for that, Paul, what was you saying? So lastly, but how can we be efficient? I think the term people use is we're not evading tax, but how can we be efficient? And Paul, when I started my business, this is one thing I didn't know. So because for the first couple of years, I didn't keep records. So even later when I was doing my books, And I was like, but I had business expenses. I had made phone calls. I had used my fuel. I had photocopied. I had nothing to show for it. And then I learned that had I kept all those records of expenses, because tax in the business, in a company this is what, if I earn 100,000 shillings and my expenses are 50,000 shillings, the tax will only be payable on the balance of 50,000 shillings. So Virginia, that's basically how you calculate tax in a business. What is your income minus your expenses? So in a very simple way, you pay tax on the profit. And I think for a lot of small businesses, because we don't keep the records, we don't know what our expenses are. So whilst I was putting expenses as 20,000, my expenses could have been anything like 80,000. But I couldn't. So what are the kind of business expenses we should be aware about? Like use of phone, because my phone is for personal and business. We just don't think about it, but I'm using my phone most of the time for business calls.
So for instance, I mean, the first thing you need to think about is record keeping, income and expenses. That's a big one, right?
Yes.
Because without that, then everything else fails. Now, after that, the next thing becomes how to be tax efficient, right? So a good example is airtime. Let's say only 30% of the airtime that you use as a business person is seen as a personal benefit to you as the business person. Because it is assumed that you're going to use 70% of the airtime for business calls and 30% for personal use. So that's why then the KRA does the 30-70 split, right? So you can see if you have airtime of 10,000 shillings, then it is only 3,000 shillings that is taxable, right? And 7,000 shillings is tax-free. Right? So you can see that's already one way in which you can manage your tax position. Now, another way you can do it is what is called insurance tax relief. It applies when you pay any premiums for a life policy, an education policy that is in excess of 10 years, or a medical policy, right? So if you do that, then 15% of your premiums are regarded as a tax relief, meaning it reduces the amount of tax you pay, right? So you can see those are already personal expenses that you could already be incurring that you may not have been aware could actually give you a tax benefit, right? Now, another good thing to do is what is called pension contribution. If you contribute any amount not in excess of 20,000 shillings to a registered pension fund, registered with the Revenue Authority and registered with the Retirement Benefits Authority, then that 20,000 shillings or whatever you contribute is a tax deductible amount against your salary. Meaning that if your salary is 100,000 shillings and you contribute 20,000 to a pension, then your taxable income is 80,000. You can see already there you are saving about 5,000 shillings to 6,000 shillings every month, right? So that's a big one. So you can see using these methods, they really add up. You will not get one method that solves all your problems, but they do add up. The other one is if you have borrowed a mortgage from a Kenyan bank, and for a house in which you live in, meaning an owner-occupied house, then on a monthly basis you are allowed out of the interest portion that you pay on the mortgage to deduct 25,000 shillings from your salary, right? So let's say your income in a month is 100K, but you have a mortgage and you're paying maybe 400,000 every year in interest. At least 25,000 shillings per month or 300,000 shillings per year is going to be deducted from your income. So you can see already that's a personal expense that then reduces your tax at the end of the month, right? So if you already have this kind of expenses, you need to talk to your HR, your finance people, so that then this is deducted from your salary on a monthly basis, so that at the end of the year, you're not in a position where you have overpaid tax because your HR or finance was not aware that you had these tax deductible expenses.
Yeah, and even if you're in business, this is an efficient way to still do it.
Correct.
Yeah.
Yeah. So if you're in business, it's also a good way to do it.
Yeah. And I guess I think what Paul you're saying is people now need to start looking long term, because many times people are looking for what will save me 30,000 shillings per month today. Yeah. And what we are saying, you may not have the 30,000 shillings saving today or the 100,000 shillings saving today, but if you do these small things, they will add up over time. And secondly, I think what we're being told with tax, they have tried to help us with the things that are important. Mortgage for a house, life insurance, medical insurance. Your personal entertainment may not factor in here, but I think over the things that are actually important, you can get tax benefits. Pension, for example. I think that is one of the best ways of being efficient on tax, plus also now building up retirement. Paul, a lot of business people think that if I buy a car in my business name, I can have all the expenses and running costs of that car, insurance, but I still use the car personally.
So that's it's yes and no on that, right? So you can transfer your car into your company. Yes. Meaning the logbook will now read the company's name.
Yes.
All expenses relating to the car will now be deductible from the company's income. Yeah. Meaning it will be a company car, right? So insurance, repairs and maintenance, and fuel will all be deductible there, right? Mm-hmm. But on the flip side, if you use that car as your own car, you can go with it to your shags, you go with it home, etc. Then it means that car is actually a personal car, right? So the law says that such a car that is being used in that way, you would have to pay tax on 2% of the car's initial cost, right?
All right.
If the car was initially worth 1 million shillings, then 20,000 shillings will be taxable every month that you use that car as an individual.
Okay. All right. Yeah. Okay. So guys, I hope you've heard. These are some of the ways we have to pay tax. The authority has information about us, but there are ways over time you can be quite efficient with your tax. So Paul, maybe we are about to close up, but we can take a couple of questions. VAT for small businesses. That's an important one. When does VAT start? How do you file?
VAT is an important one because you see VAT doesn't apply to everybody. So that's another myth actually. So VAT, you should not register for VAT as soon as you open your business, you register your company.
Yes.
VAT is only charged by businesses that have made or make 5 million Kenya shillings in a year.
5 million plus.
So let's say I'm a consultant, I've started a company, that company makes 3 million in 2020. It means I don't need to register for VAT.
Yeah.
I don't need to get an ETR machine and I don't need to charge VAT, right?
Okay.
However, by when you work with many corporates, they want you to have registered for VAT and the law allows you to do that.
Okay.
You can voluntarily register for VAT. You just need to remember to charge VAT and issue an ETR receipt and also to file a return every month, failure to which there would be a penalty of 10,000 shillings, right?
Okay.
So there are many businesses that register for VAT and then forget about it.
Yes.
So in a year, they accrue a penalty of 120,000. In 5 years, that's a huge amount, 600.
Because of just not filing the return.
Yeah, simply because they didn't file a return. So that's something to be avoided,
Okay. When I first registered my business, I didn't know that. So immediately, even at zero revenues, I went and registered for VAT, which I learned later was a mistake. So you're starting your business today, do not register for VAT unless you're instantly making 5 million shillings and above. Yeah. which is what not most businesses are. But because I did that, that is one of the problems we got into. First of all, we had to pay VAT because we had registered. And I learned that once you register for VAT, it's impossible to deregister.
Near impossible.
It's near impossible to deregister even though you're under the threshold. And even that, when the business slowed down and even for a while, We had to, even when the business, because our business ended for a while, we had to keep filing nil until complete wind down of the actual company. So people out there, I know they have companies out there that closed, stopped, whatever. If you are registered for VAT, take it from me, who learned the hard and expensive way. File the nil returns until you are sure the company has been wound up, not just legally, but also on the tax side. How would people, Adongo is asking, if you don't have receipts, how else would you keep records of expenses? Is receipts the only way? And there's a recommendation from Abdi, maybe you just use credit card, debit card, that also helps with that. Is there any other thing that would be taken as proof of evidence of expenses?
No, there wouldn't be. So in fact, if there's any payment that you're saying you've made through the bank, KRA will ask you for your bank statement.
Oh, okay, all right. Okay, Paul, my goodness, I know we could carry on for another hour, but everybody, I hope that this has been as insightful to you as it has been to me. Paul, just before we wind up, any last comments or thoughts as people prepare to be tax-paying citizens?
Just two things. Number one, keep all your records of income and expenses. That's very important.
Yes.
Number two, get assistance from a registered tax agent or an accountant who then knows exactly what they are doing, because then they'll be able to give you up-to-date information. And if I would add a third one, there's a lot of information out there. I'll give you an example. If you just Google KRA Media Center, you'll be able to get quite a lot of documents that KRA issues to the public all the time. Go through the KRA website, it has detailed information, then that keeps you up to date. But long and short of it, to grow your wealth and to protect it, you need to be tax compliant.
Okay, all right. Paul, thank you so much. Thank you so much. My take home from this conversation is you cannot shrink into greatness. So, and whenever you're trying to avoid paying tax, you've entered the shrinking game, not the greatness game. But I think we are here and we are on this platform because we're trying to create wealth. We're trying to achieve various things and various goals in our life. Let's be tax compliant. Let's learn. Obviously, in just 1 hour, we can't absolutely cover everything about tax. But what we really want, and guys, I hope we have achieved this, is to change the mindset of thinking about tax as something to avoid, rather than thinking about tax as something that has to be done, comply with, and then you're free to do. Basically, pay tax, and then you're free to do whatever it is that you want to actually do. And of course, if you do want to get the book, you can get it at the various details are on screen. You can call Centonomy directly and get it at 1,000 shillings. And you can also order it from online, various places, online, Amazon. If you do buy it from Amazon, please leave a review. And thank you for those who have been leaving reviews on Amazon, Rafu and Nuria Books. And physically in Kenya, the bookshops are Yaya Center, Africa Book Hub, Prestige. But as our borders open, and a lot of you have asked, we are also going to get the physical books to some of the countries in the region. And the book is basically conversations such as this, based on stories around real people and how their financial journeys have panned out and what they have actually done to create wealth. So please, I encourage you to do get the book, read it, and thank you for joining us again. Please do join us next week. And next week, we are talking about something very close to my heart, mental health and money. Because we know, especially now, there's money and there's our mind, and both of them need to work. And there's a place the two relate and affect each other. So we're going to have a topic, mental health, with an expert. And I'm coming in as well to bring in the money side of the conversation. So please share, tell your friends, and see you next week, Friday. Paul, thank you once again. And everybody who's been here, have a great weekend, have a great Friday, and see you next time. Bye.
Right. Thank you.